Hello again, everyone. It's your host, Marian Matakif, and I'm here with Giulio Mariani, who is a senior data scientist at Experian. And we're going to talk about an exciting topic, a new topic. It's the ESG regulation. So, hello to you, Giulio, and I'll start off with a question to you. We all know how ESG is important globally for us all in our daily lives. But what does it really mean to Europe as well? What does it entail at the European level as well?
Yeah, thank you, Marian, and hi, everyone. So we know that environmental, social, and governance had a huge impact across the globe. And this is really important, especially in the European Union economy. So starting from 2015, with the first agreements coming from United Nations, we know that after Paris Agreement, there has been a number of steps that the European Commission took. And now with the Green Deal approval from European Commission, we have European Central Bank and European Bank of Authority that are focusing on next steps for banks. So there is a specific final guidance coming from ECB for climate-related and environmental risks for banks. And on the other hand, also European Bank of Authority has created a report on how to manage and supervise ESG risks for credit institutions and investment firms. So there is a lot of regulations, a lot of requirement for financial industry, but this is tremendously important because this will have an impact also on daily life of citizens in European Union and then, of course, across the globe.
Okay, so there is already a new regulation, right? What does that mean for the market players, and what are the steps that they need to take in order to cover this regulation and make it look good?
Yeah, actually, I mean, there is a lot of new regulation for the financial industry. And for this reason, there is also a lot of new steps that banks, but in general, all the industry needs to take. So here we try to emphasize four main aspects that are coming from ECB guide on climate-related and environmental risks. So here are the key pillars and the supervisory expectations. So first of all, of course, you need as a bank, as an institution, to have a business model and strategy related to environmental risk. So how any kind of change, for example, in temperature or in climate related will change and will affect your business model. And then, of course, there is a key point about governance and the risk appetite. So again, you need to have in place some tools and solutions that will allow to structurally into a large organization to manage ESG information and to have it in place for any kind of governance and risk appetite framework. Then there is a strong topic about risk management. So we know that banks will be required soon to have first a risk management framework that takes care about ESG data. So the way and the approach that banks will provide, for example, loans or credit cards or any financial tool will need to take care also of environmental, social, and governance data. So we are going into a direction in which if a company in the future will ask for a loan and such company is a good company that is investing a lot of their investments into reducing pollution, they will get access easier to credit and they will have a lower risk. And then the second point about risk management is about a stress testing scenario. So banks will soon need to have a stress testing scenario that will take into consideration of what will happen if in the next 10 years we will have plus 2 degrees of temperature, or what will happen if we will delay to comply with all the regulation coming from Paris agreements, or what will happen to a large organization if there will be a scandal of one of the C-level of the bank itself. So all this kind of stress testing will need to be in place very very soon. And finally, of course, there is a pillar related to disclosure. So also policies, procedures will need to take care of ESG information, because as you perfectly are aware, there is a lot of information, especially into the governance fields, that relates to policies. So there is a huge work.
Yeah. So there seems to be at least some clarity on what are the steps to take, but how do organizations take them? And specifically, I'm wondering, for example, for the small companies that are trying to get access to credit, how do you assess whether they're good enough, or that they're a part of the sustainability equation, and what is their contribution? So how do you assess them from an ESG perspective? I guess the scarcity of data, it could be a huge issue here, but how are you helping? How is Experian in general helping organizations tackle issues in the ESG environment?
Yeah, I mean, you touched the key points. So data scarcity is actually something really of tremendous importance into ESG topic in general, but especially when we relate to small medium enterprises. So let me give you first of all a high level overview of how Experian is supporting clients. So first of all, we are partnering on a global scale with the main data provider for ESG data for large corporate. So we have a lot of information for any kind of listed company with public balance sheet information regarding ESG. So for example, how large corporates are investing on reducing pollution, how they are investing in diversity and inclusion, how much money they are spending to make